Yeah, hello everybody, and welcome to this channel. Today we just going to talk about the Forex market, and we're going to learn how to do some quick markups, how to mark up your charts, and to know what's happening in the markets. So basically, Forex is like Forex the exchange, where we trade on the Forex market, where different currencies are traded each day. It's over $5 trillion dollars being traded on a daily basis. So it's one of the biggest markets that you can have in the planet. There are many other markets, and so all that we do is we have traders buying and selling currencies and creating the demand and supply for those currencies. So to help me analyze this is the use of TradingView. So TradingView is the platform that gives me access to get into the markets, and that's it. You could subscribe TradingView. Well, I'm not promoting TradingView per se, but that's what you could do, and then you can use it to mark up. We have the free TradingView where you have limited access to some of the tools, and we have the professional version where you could go ahead and subscribe and get other tools. So on TradingView, today I want to look at US dollar and Canadian dollar. That's USDCAD. And so let's look at what happens. So basically, as Forex traders, we are investors, and investors, we're supposed to come to the markets and look at the markets and look at what opportunities are available on the markets, and then we take advantage of these opportunities that are available on the markets. So all we do is come to the markets, see what's going on in the markets, and check out what opportunities are there in the markets for us, and then we take advantage of the opportunity. So as investors, we're supposed to protect our capital. That's one of the basic things that we're supposed to do. We don't want to go into the market and be losing money all the time. We're supposed to make some returns out of everything that we are doing on the market. So we also have to learn that the market moves in three directions: impulse, correction. So the market moves impulsively, then it will correct, and then the market will continue. So that's the three basic movements or behaviors on the market. So impulse, correction, continuation, either moving up as we have here, or probably on a descent. When the market is on a descent, you have the impulse there, and then the market will correct itself, and then it will continue. Basically, the impulse gives you the direction of the market. The correction gives you a confirmation of the direction, and continuation is where you get into the markets and you make your profits. So that is basically what goes on in the markets, and that's how the market behaves almost every time. So there's an impulsive movement, and then the market corrects, and then it continues. So this is what the market does every time. It doesn't change. So there's an impulsive move, as you can see from here, and then the market will correct itself, as we can find here. It corrects itself, and then it continues again. So there's always the impulse, there's a correction, and then the continuation, the correction or the flag, and the continuation, till you get to where the market reverses, and then it changes its pattern, and then a new impulse comes into being, and then there's a correction, and then it continues. So that's what basically the market does all the time. And what we do usually on the market is a top-down analysis. So we mark up from the monthly, the weekly, the daily. These are the three most important time frames. So the monthly, weekly, daily are the three most important time frames in every chart that we mark up. So we do a top-down analysis. So we mark from the biggest time frames. So it's just like you having a book. You would want to know everything in the book. You don't just check on the cover and know everything in the book. So you need to read the entire book. So the monthly basically gives you a good impression of what is happening on the markets, the entire market, and then the weekly, the daily. So that's how it goes. So we're going to mark up with this, which is UCAD, and let's look at how it goes. So basically, that's what we do. We box in price and then we react to it as traders. So that's what we're going to do. And as I mentioned, we do a top-down analysis. That's we start from a higher time frame, in this case, the monthly, and then we move on to the weekly, to the daily. So these are the three most important time frames. And from there, we continue to the lower time frames where we get to know where we enter the market from. So now let's quickly do this. So in this pair, that is USCAD, this is our monthly chart, and so we mark out the high and the low, so we know exactly where price is. So we use our horizontal ray or horizontal bar. Yes, so we mark it up nicely here. So that was the lowest it came. Of course, there was a lower region around here, but it's not too significant because most of the most of the candlesticks were just around this area. And so we are dealing with this high and then this low, but currently price can be found here in this region, that is 1.3054. And so that helps us to know whether we are on a downtrend or an uptrend. So we are kind of, it's going on an uptrend because the last time price came up was around here and it dropped to this end. It came and then it went back again, and then price seems to be going on an uptrend again. But then we see that there was an impulsive move up here, and it's like it repeated itself. So the structure was respected with regards to what happened here. So from the higher time frame of monthly, we go to the next time frame, which is the weekly. So let's look at what's happening in the weekly. So in the weekly, we have some patterns forming. Let's see. So let's mark up. Let's mark up simply. We really don't need to go back so much, but we can just look at it here and then be able to determine what is happening on the market. So let's mark up here to determine what is happening. So let me clone my line, then I pick it up again. Sure. So basically this is what it means, that anytime the market came to this trend, it moved up again. But we could see that there are channels that have been formed within this channel. So we can find that there's another channel here. There's a channel that was formed here. Okay, there's a channel that was formed here within the channel, the weekly channel. So there are various patterns. When you drop down to a lower time frame, you find out there are other channels that have been formed. So all price was doing was that it was moving in this channel. So it came here, it moved up, it didn't break up this channel, it respected, and then it came down again and it moved up, it respected the same region and it came down again. So as often as price tests trend line, it may weaken the trend line. So it's likely it can break up or it can break down. Okay, so that's what we found here. So when it went up, it came here and then it broke the trend line here. Then it formed another pattern here before it broke upwards. So that's what price has been doing. So within the weekly, we can find out that it goes up here and then it comes down. It goes up and it comes down. It goes up and it comes down. So that's what has been happening. So you only have to be patient and know when to enter the market, and then you'll be able to make enough gains out of this market. So that's basically what was happening. So price was playing in this channel. So you don't just enter into the trade, but you need to understand what the market is behaving, how the market is behaving, and how price is respecting the various structures. And it repeats itself. Whatever price has done previously in the market structure, it will repeat itself. Now let's go to a lower time frame to see what is happening over there. So on the daily, so when you're able to mark up on the higher time frames, it helps you to be able to know exactly where price wants to go or what price wants to do. And then with that, you are able to know where to enter the market. But you enter the market in the lower time frames. So what are we saying here? We've seen that price went up and it's going down again. And we are just looking out what will happen over here. If price is not able to break this trend line here, if price is not able to break this trend line here, then it's just going to follow the same pattern again. Then it's going to move up again. And so that is what is happening in the market. So it's just repeating itself each time. The market is repeating itself each time, and nothing different is happening. But you need to mark up in order for you to know what price is doing. Remember, when price was going down, there was a consolidation pattern that was formed here. So the market consolidated a bit, and it still respects the three behaviors of the market: the impulse, the correction, and the continuation. And we enter from the correction or the flag. And so the flag always gives us another opportunity to get into the market. So it's on a downtrend and there's a flag here. It gives you an opportunity to get into the market if you miss the first move down here. So this flag helps you to get back into the market, and then you milk it down. There's another flag here, and you get the opportunity to get into the market, and you milk it down. There's another flag here. Or you could just take it from the top and then you ride it down, or you take it from the bottom and you ride it up. But you need to mark up. Without marking up, you'll not be able to know what market is doing. So just the same way you're able to see. So that's what price is doing. So our expectation is that if we don't have a huge impulsive movement down to break and retest and then go further down, we are still going to go up again. We're still going to go up again. And what the chances are that it may break this trend line, it will retest, and then probably it will go further up, so that what happened previously around March 19th will happen again. So that's what price is doing. Now, so how do we enter this? We go to a lower time frame. So let's go to the 4-hour and let's clean our charts. Let's remove all the drawings so we have it and reset. Good. So this is what price has been doing all this while. So we have the impulse and the correction and all that. So you realize that the highest point with the market came in September was around here, this position here, 1344, and the market could repeat itself, as I always say. So let's see. Let's look at where price has respected. So price has respected this region. So anytime price came here, we saw a reversal up, and we are expecting that the same thing is happening over here. And anytime that price got to this level on the top, there was resistance, so it couldn't break through the ceiling. Anytime price got to the top, there was resistance, so it couldn't break through the ceiling. So that's all that price has been doing in this area. That's all price has been doing in this area. So anytime it got up here, it came down. Anytime it came down here, it went up. So it's just been moving in that direction, and that's what we do. So we are able to, that's why we say we boxing in the price and then we react to it. We react to the market. You cannot predict what the market will do because we are not in control of the markets. There are bigger players like the banks and the other institutions that are able to move the markets, and you and I are retailers, and we cannot do much with what we have. And so our expectation is that there will be a movement up maybe to this end, and if the impulse is great, then it will be able to break the ceiling. So we are expecting price to move up here, but then it's not going to be a straightforward movement. So it may go up, it may come down a bit before it will consolidate, before it gets in there to the top here, and then we expect a swift move downwards. Or if it's able to break through the resistance, it will correct and then it will move up into the sky. So that's basically what we have, and then we can go to the 1 hour time frame to look at how price is also behaving there in the 1 hour. It's similar. It wouldn't be different. It's just going to be similar. So we can see that there was a huge impulse. There was a huge impulsive move here. There was a huge impulsive move here, and then there was some consolidation here. But of course, it moved up here. So if you are not able to mark up clearly to know exactly what the market is doing, then you buy. But then see what happened. If you really did your markups well, we would know that price was just playing in this area. And of course, it broke through the ceiling and it retested, but it couldn't, the impulse was not so great, so we couldn't move upwards, and then it came back to respect the same positions again. But then what it did was it broke downwards. Okay, it broke downwards, and that's why we got it down here. And so that's what price has been doing all this while. That's what price has been doing all this while. And after marking up, you know that yes, it's going to go up again, and somewhere around this position we may experience a little bit of consolidation somewhere around this position. If you go back to check on the market structure, you realize that it might have there's some sort of a resistance or a support. You know, support can turn into a resistance, and resistance can turn into support. That is when it's broken into. So when you look at what happened here previously, this was a support area. This was a support area. And now that support area was broken by this huge sell impulse. And now it's become a resistance. So I'm anticipating that when price gets here, that this resistance will still work, will play out as is done previously over here. Otherwise, when the impulsive move is greater, then it's going to break through this level, and then it will go up to this level here to respect the market structure there. And to enter this market, you need to go to the lower level or the lower time frame to get into the market. But I wouldn't advise that you get into the market at this time. You need to just hold on for price to do what it wants to do, and then you go in at the right position. Why am I saying this? You may need to be able to get in where it is most appropriate so that you can get more. You don't get in the middle of the trade. When you look at what is happening here, this way, we have this whole move here, and the price has already taken off. There's an impulsive move. So as price is correcting, you just hold on for it to correct, and then if you want to join in, then you can join into the top, or you just hold on a bit and then you wait for price to get here, and then you could ride it down depending on how the market behaves here. But if if it breaks the trend, wait for the correction, and then you go upwards with it, you buy upwards. So just wait for the market, let the market come to you, don't chase the market, otherwise you are going to lose so much money. And so with this said and done, would want to say thank you for joining me here, and look out for the other videos, and it's just going to be very snappy, and I wish you a good trading time. God bless. See you later. Bye bye.